bring in our next guest. That's Jenny Horne, markets correspondent here on the Schwab Network, also co-host of NextGen. All right, Jenny, I know we're starting out with a look at Salesforce. It's on the receiving end of an upgrade. Tell us the details on this.
Yes, with some positive news, because as we know, Salesforce has been one of these names, an early adopter of AI, but that also has meant then one of the laggards into the back half of 2024. So today, with some optimism, TD Cowen did upgrade shares to buy from hold, price target that was raised to $400 a share from $380. And following, they said this 2024 really strength towards the end, like the December rally specifically, and Agentforce excitement. They do believe that shares now have pulled back, which in their opinion does create now this attractive entry point. They did also say that their IT survey screened for favorable trends for Salesforce, which, while its recent checks they said have been highly constructive on the, again, elevated interest levels for Agentforce, they now see several new growth levers in their model that could emerge for 2025. So I think that that's hugely important, especially because, again, I don't see the AI narrative being the rising tide that lifts all boats, as many would have you believe in the tech world. And I know this name rose to about $369 a share towards the end of the year, but still does remain up about 19% over the last 12 months. We've pulled back from that high, though, by about 13%. So could assess and say we are technically in correction territory. But I do think important that this analyst not only sees upside, but they see a price target of $400 a share, which would obviously be above the highs of last year. So that's at least a step in the right direction. This is one of these names, though, that has been definitely volatile. Again, it hasn't been a clear winner of AI, although at least at this point we are sitting at around all-time highs, not even 52-week highs, which is not what we can say for all tech, frankly.
And then, Jenny, I did find it interesting when they had their big Dreamforce conference, and then you had the news about this Agentforce, and then the way they would be approaching AI would be more of an agent approach versus the co-pilot approach. What are other views from the analyst community around Salesforce?
You know, pretty optimistic, I will say. And frankly, it surprised me how optimistic, because, again, I look at this name as like an early winner of AI. We saw it sort of chop around last year, but God, 51 analysts. And right now there are, I mean, the majority hang out. Right now we have 13 strong buys, 25 buys. So definitely the majority in the buy camp. 11 holds, 0 underperformance, but then 2 sells, which is a pretty significant mix, especially when you have such high conviction to the upside on like the buy camp. And then also the average price target right now is around $398 a share. Does imply about 24.5% upside from here. Street high, though, is $450, while the low is $247. So the street conviction overall, and again, a good portion of analysts do cover this name. Sell side would make you think that there's still a lot of optimism to be had now in the new year, Dan.
Okay, and then let's take a look at another company that's got some analyst activity happening around it. This is Spotify. This is the opposite of Salesforce. We've got a downgrade for this one. Tell us the details, Jenny.
I know, and unfortunately, I covered this name a few days ago on all of this optimism. Sell side was so excited about this name and enthused that there's still a degree of pricing power where they can continue to, and at least the optimistic note I read earlier this week, continue to charge some significant upside if needed, because they offer such a premium product where we as consumers will continue to pay, which I could definitely speak to anecdotally in my own personal life. I think Spotify is probably my most used app and the most useful thing that's ever happened to me as far as like music streaming is concerned. But Wolfe today taking on a different approach with a rare downgrade to pure perform from Outperform. Well, they did remove their prior $560 price target. They did say that Spotify offers a highly durable growth story with an improving ROIC profile and plenty of optionality, while the stock's valuation still does look reasonable. They did also say that revenue forecasts look full following lots of these price hikes, like one I discussed earlier, and as well as the developed markets beginning to become more saturated. I think it's important to note a lot of these companies, streaming world and some of the more new tech players have really pushed a lot of their growth overseas, but Spotify has been an early adopter of that, and I think that it's an interesting view to say perhaps we are already maybe capitalizing on the growth overseas, and that's already being priced in at this point. So a rare, more cautious tone for a name that has been just in a near Netflix type move over the last year. I know not the same extent, but gosh, I was looking at the 3-year chart. tactically speaking, longer term, it's really a strong looking picture here. And also the fact that, again, you have some corner of this market because their ability to raise prices only continue to solidify the streets. I mean, like, really enthusiasm behind this name. I think the story for Spotify has been charging consumers more, unfortunately, but it's really seemed to pay off.
Okay, yeah, I do find one of their takes interesting in this Wolfe Research note. The developed markets beginning to saturate, and it seems like their restraint has to do with the potential for the revenue forecast. But if they still have pricing power and can continue to increase prices, that would be obviously favorable to Spotify, but it looks like the street is listening to this downgrade. The stock is indicating lower in the pre-market. Great breakdown. Jenny Horne, markets correspondent here on the Schwab Network. Thanks a ton, Jenny.